It is. All right, there we are. So we are live in our Facebook group, on YouTube, and everywhere. So thank you guys so much. I want to welcome you guys here tonight. We are with David. David he's the owner and hard money lender with eFund Homes. Okay, so today we want to talk to you, David, about hard money lending, right? This is like a big topic. This is something that everybody, if they're not already aware of hard money lending and the benefits of it, and why every single investor, whether you're wholesaling, you're flipping, you're got rental portfolios, whatever it is, needs to be connecting with hard money lenders, right? So that's why we have you here. So David, I'm gonna give you the floor to say, introduce yourself, tell us who you are, a little bit about yourself and your company, and then we'll take it from there.
Okay, thank you very much. So first of all, I am a real estate investor first, 25 years in the business. And eventually I got into, let me be a hard money lender. Sometimes it's a choice of, do I want to be a real estate agent? I'd rather lend money. I think it's very profitable, and I'm good with numbers, so it just is up my alley.
Yeah.
So the difference between hard money and traditional lending. Mm-hmm. Traditional lending will be like you buying a home in your own personal name, for your family to live in, or perhaps a second home, or even, your first few investment properties. That's what I did as well. But hard money is more, you're buying a property under a business name. Mm-hmm. It's really taking that step into doing investing as a hobby and getting it into a business now. Mm-hmm. Now, I'm not absolutely sure about this, and I've actually sent you a message earlier today on Facebook about it.
Yeah, I saw that.
Oh, you saw that? Okay.
I was definitely going to bring it up.
So, after like around 10 homes, it's harder for you to get a loan from, anything backed by Fannie Mae, Freddie Mac, traditional banks, based on your DTI and just based on how many properties you have under your personal name. Mm-hmm. Eventually you want to make the step to buying properties under your business name, where you may have a personal guarantee for hard money, but still it's separate from you yourself.
Right.
Okay. Right. So hard money, almost always, I just seen a few exceptions where you pretty much have to buy it under an LLC.
Okay.
Okay. And it could be a brand new LLC. It's fine. You can have one LLC that owns 20 properties. You could have 20 LLCs that own each one of each property. That depends on how you want to set it up. But basically, hard money allows you to get into real estate with either doing quick bridge loans for acquisition or fix and flips. Mm-hmm. And then you could also use hard money for owning a property under a 30-year loan, but under your business name, not under your personal name.
Okay.
Now, the interest rates are not going to be as low as personal, but right now I've got them as low as like 3.5%, 3.85%. For in a business name, that's pretty low.
Right.
That is pretty low.
Very low.
For 30-year fixed. Now, as well, commercial properties, anything 5 and up, mixed use, apartment buildings, office buildings, self-storage, hotels, motels, stuff like that. That can all be put under commercial lending or even hard money loans as well. Okay. So what I tell people, especially if they're getting into real estate and they don't have good credit, is either one, your specialty, wholesaling. Yep. Get that cash up. Once you get cash, you can fix your credit. Yep. And also to do fix and flips in hard money. Now, my brokerage, we have plenty of lenders that can do fix and flip loans with a credit score as low as 300.
Wow.
Which is about as low as you can go. Or no credit, or flying nationals. You don't even have to live in the country.
Wow.
Okay? So if you want to get into fix and flips, it will bring you cash. It's basically, I want to get into this property. You're going to need some cash, in order to get into the fix and flip, but you can come out making 30, 40, 70,000 when you flip this deal. If you have bad credit, usually you got to pay stuff off, use that money, pay stuff off, have some money to do another deal, keep on going. Then eventually you can do some rentals and flips. Eventually you get into apartment buildings.
Right.
It's just a nice stepping stone.
Yes. So some of the as I'm understanding, like some of the benefits of utilizing a hard money lender. One is, even if you do have good credit, even if everything is on par, once you've gotten past 10 properties, now you're like, okay, traditional funding is not really the best option when it comes to that. And then two, if you don't have the best credit, right? If you don't have the best credit, maybe you have some cash and you're looking to do some fix and flips, but you can't go to your traditional bank because they're not gonna accept you, right?
Well, here's the other thing as well. If you are going to a regular bank and you want to buy a shell, they won't allow you to. They're only going to lend you on something that's habitable. It's got to have working kitchens. It's got to have working bathrooms.
Right.
So if you're buying stuff and, hey, I can see the roof, by walking in the first floor, no, you're not going to get any of those loans from the banks. You have to go to hard money.
Yeah.
So a lot of the deals where, and you should know this as a wholesaler as well, and so should your whole group, is, where there's problems with the house, there's equity.
Yep.
And that's the deal, So if you're buying a shell for very, very cheap and it may take a lot of money to fix it up, therefore you could sell it and you can make a lot of profit at the end. So hard money is the way to do that with not so much money out of your pocket.
Right. Okay. I think that's great. And guys, if you have questions, I see some questions are coming in. If you guys have questions, make sure you post your questions. We're gonna get to them all. David again is here from eFund Homes, hard money lender, and he's here to really shed light on how we can utilize them. Whether again you're wholesaling, you're flipping, you have rentals, right? So that's what we're going over tonight. So somebody that might not even be able to go to the banks for these properties that need to be fixed up, or they don't have good credit, or they've gotten to a maximum of 10 properties and now it's getting kind of hard for them. When they approach you as a potential client, what is it that you're looking for? Is this we actually have a question that's saying, is this asset based? Like, is the hard money lenders, are you guys making your judgments and your approvals based on the asset itself?
Okay, that's a good question. Now, as a broker, I have access to over 150 lenders. Okay? Some of them are asset based, and some of them are not really that much asset based, and some of them only do bridge loans, and I'll get to what a bridge loan is as well.
Okay.
So I do have asset based lenders, and a lot of times I tell people, if the property has equity in it. So in other words, let's say you have an office building and you only have a portion of the office building rented. You don't have it fully rented. So you can purchase this property even probably no money down by using some of the equity as part of the purchase price. Because once you rent out the rest of the office spaces, then the property will be worth more, and the lender should know that.
Right.
They can lend on that. What was I going to say? As far as getting into the deal, though, I must say things have changed since COVID. A lot of hard money lenders allowed you to put 10% down for the purchase price. Now it's more 20% down for the purchase price.
Okay.
And that's just a purchase price. So keep in mind, if it's a shell and you get the shell for, let's say, $50,000, now you're talking $8,000 to $10,000 down.
Right.
Okay, to purchase the property. If it needs, let's say, something like $80,000 worth of work, they will lend you the $80,000 worth of work. Okay. Now, all of this is based on a percentage of the ARV.
Right.
Usually, it's around 65%.
Mm-hmm.
It may be higher if you're more experienced. If you've shown them, really the experience level they look for is like around 3 or 4 deals within the past 3 years.
Okay.
Okay. So if that's the case, you might even get to 70, 80% of the ARV. Some lenders, if you have a good relationship with you, they'll lend you everything. If
Right.
you just proven to them that you know what you're doing. But I'm going to talk about more people who are new. So I would say it's more 20% of the purchase price.
Mm-hmm.
So let's say it is $50,000.
Mm-hmm.
$10,000 down for the purchase price. Let's say it needs $70,000 worth of work. So now all in, it's $120,000. But let's say the ARV is $200,000.
Mm-hmm.
It's less than 65%. They will lend you all of that $70,000 fix-up cost. However, I want to point this out because a lot of hard money lenders do not point this out. They're not going to give you that $70,000 check.
Right.
Because you could get that check, you could go, maybe not now, but you can go on cruises all over the world and buy yourself a new nice car, and they're stuck with the house. So they want you to come up with money to pay for it up front, at least a portion of it, and they call this a draw. So let's say it's 75,000 and you're doing it in 4 draws. So it'll be 17,500 each. Okay? Let's say you have a $20,000 credit card. Okay? So you could pay the contractor with the credit card. Hopefully they'll take credit cards, or if you have cash, whatever, however you're gonna do it. They'll come, they'll inspect it. Hey, you did the roof good, you did the framing good, electrical, the plumbing. All right, here's 17,500 back. Use that money again for the second draw. Okay, now to do some sheetrock, maybe to do the cabinets, to start tiling the bathrooms. Okay, second draw, they come and inspect.
Hey David, we're getting somebody saying that there's some feedback, like an echo. I don't know if you can turn down your volume. Maybe that will help.
Okay, let me see. Where's my volume control? Oh, this would be good if I could find my volume control.
Yeah. So while David finds them, yeah, because I can even hear myself echoing too. So maybe it's the volume.
Yeah.
But yeah, and I heard about draws, right? So what David is saying while he turns the volume, I'm not sure if it will go down. If it won't, we'll just have to keep going. But if you're able to, it
I turned down the volume. Do you still hear the echo?
Yeah.
You do?
Yeah.
If I turn it down anymore, I won't be able to hear you.
No, it's okay. It's okay. It's all right. So we'll try to make it through. Sorry about that. But go ahead and continue. So you were saying if you have, you're doing it in 4 draws.
So yeah, with the draw is there to protect the lender and also protect you as well, especially if you are new to this. So let's say you paid for the roof and the roof was not done right. The inspector is going to come and they say, hey, look, you're not going to pass with the roof like this. There's problems here. The rafters aren't good, or the rubber roofing is not done correctly. You're going to fail inspection. So before you do any other work, you got to tell the contractor, look, I paid you for this. You got to fix it.
Yeah.
Make sure it's done right.
Now with the draws, when because like you're doing it in a certain time frame. So is that based on time? Is that based on certain things being done?
Well, whenever you're doing a fix and flip, you have to give the lender a plan of how, what you're going to fix. And it may not be time frame so much. I mean, you do want to do, let's say, the roof before you do anything else in the house.
Right.
I mean, makes no sense to put in a new kitchen and there's a big hole in your roof.
Right.
So, I mean, there's going to be a plan on what you're going to fix and when, or at least, what to do first in some kind of an order. And they want to make sure that, hey, everything is done right, Right. So they want to make sure that the electrical is done right. Everything is done to code. The plumbing is done to code. Because if anyone here has ever worked with contractors and you got to have inspections by the city, they can be killer. You know, a lot of times you've done something and they got to come back 2, 3 times to inspect, and it takes time, it takes money. In the meantime, you got to pay for this hard money loan, you know, as well. So time is of essence, and getting a good contractor is essential as well.
Yes, yes, yes,
You
yes.
know,
That is definitely essential. And for this is this somebody asked what is your LTV and the loan to capital?
um, that's gonna go more on experience. Like I said, usually it's 20 for new people, 20% down on the purchase, 100% up to 100% on the rehab cost, up to 65% of the ARV, of the after repair value. Okay. Now, let's say the property is all fixed up, and now you want to keep it as a rental. You want to keep it under the business name as a rental. Usually it's between 75 to 80% that they will lend you of their ARV, LTV, you know, loan to value.
Right,
You know?
right.
So you can cash out and then pay off that hard money loan, keep the low, low fixed rate mortgage for the 30 years or so.
Yes, yes, yes. Okay. And now with the hard money loans, because typically speaking, when you hear about like hard money lenders, you think of flippers, right? You think of you're just getting in and getting out, but you don't really think of like long term. And I heard you mention earlier about being able to get like a 30-year loan with the hard money lender. So this is for both long term and short term.
Yes. And I would say this: if you're going for a fix and flip, you have to tell them the exit strategy. Because most fix and flip and most hard money lenders are into what's called bridge loans. It's only 1 year, or let's say even 6 months to 3 years. A lot of them don't even go to 3. They only do like maybe 1 or 2 years.
Right.
To get in, to acquire the property, and then what's your exit strategy? How are you going to pay us off?
Yeah.
Are you going to refinance? Are you going to sell the property? You know, so if you're planning to keep it as a rental, then yes, you definitely want to talk about, they're going to ask you as well, what's your credit score now?
Right.
Because they want to make sure, hey, if you got a 530, you're not going to be able to refinance and pay us out of this loan.
Right.
You know? But if you're fixing and flipping it, 530 is no problem. You know, you're selling it, you're going to get cash in your hand, and hopefully when you come back, your credit score goes up.
Yeah.
You know? But for the long term, and there's a lot of times, I even had a guy the other day who wanted to buy 10 rentals in a portfolio loan. So it's just, I want 10 rentals. What's the best rate you give me? 30 years. So it's more, not so much about fixing and flipping. It's more about you're buying it under a business name, and what are you going to do with the property? What is your strategy?
Yeah.
And I always recommend have more than one exit strategy. Don't just have one. If you are low credit, maybe you have cash, then you have one exit strategy. You better sell it.
Yeah. Yeah.
You know?
That's key. That's definitely key. They're having multiple exit strategies is major. And guys, again, keep your questions coming in. I see some questions coming in, so we're gonna get to all your questions. If you're just tuning in, we are talking with David, owner of E-Fund Homes, hard money lender. And as David said, he is an investor first, right? So he started out investing, transitioned over to being a hard money lender, and he's just a plethora of great information, guys. Trust me, I've been on the phone with him for hours upon hours, learning so much from him. So we could only talk about one thing tonight. So tonight we're talking about
only one thing tonight.
We can talk about a lot, right?
Yeah.
So again, when people are thinking about hard money lenders, right? You typically think of the individual that, again, your flippers, your landlords, but a lot of wholesalers, right? The people that are just kind of getting into this space, trying to build their capital up. They don't really tap into the hard money lenders, right? And I think that this is a greatly missed opportunity for several reasons, right? So one thing, the hard money lenders, right? The reason that wholesalers, we should be connecting with so many of hard money lenders, as many hard money lenders as you can possibly connect with. A couple things, right? One, the hard money lenders are connected with buyers, right? You
Yes.
know who's buying the deals, who's really buying the deals, right? Because there's a whole lot of buyers out there, but you know who's really buying the deal. So, you know, if you had a deal and you're actually, maybe you can send those deals to your hard money lender to see which one of your buyers may be interested in it, which one of your clients may be interested in this. Hey, the hard money lender himself, right? We got an investor here. So, you know, do you have relationships? I mean, obviously, with investors in a way that where wholesalers could even say, hey, we have a deal, or how do I connect with your buyer?
Yeah, because some buyers, some of my clients are buying in certain areas, or they buy all over, or they're looking for one specific type of deal. They're looking for, let's say, 3 families, or they're looking for single family homes, or they're looking for fixer uppers. But, a lot of wholesalers want.
Yep.
And as well, I should mention this. A lot of time when someone is buying hard money, they're telling the owner, I'm paying it cash. So they're listed as a cash buyer, even though they're truly not. It's
Right.
just because hard money can traditionally close very fast.
Right.
And the reason why I'm saying traditionally is because right now, once again, it's COVID time and things are a little bit different. What's different now, I think it also has to do with the interest rates. Interest rates are so low, there's a flood of refinancing in the market. The appraisals are taking forever. The appraisals are taking forever. 3 weeks, 5 weeks sometimes. A lot of hard money lenders I have can close within 2 to 7 days even.
Yeah.
But if they need an appraisal, they're not closing in 2 to 7 days.
Right.
There are ways around it. A lot of them do what's called BPOs, local price opinion. They usually come in a little bit less, but I would say that's more for the advanced investor who just may need a shot of money. They're not relying on this money all the time like that.
Right.
The investor may want to go for the appraisal to get the highest value of that ARV that they could get from the appraisal, so they can get the most amount of money from the hard money lender.
Right. Yeah.
But yes, for wholesaling, you want to have, of course, your cash buyers, and you want to have a list of people who are flippers, but they use hard money.
Yep.
Why limit yourself?
Yep. Absolutely. Yeah. I mean, it's important to open yourself up to that, and the thing with the wholesalers, right, we're trying to, flip the property, essentially flip the contract, I should say, quickly. So those cash buyers are great, but again, like you said, those hard money lenders, we can get. I mean, most of our buyers, although like you said, they're called cash, but most of them are using hard money. Truthfully, so building those relationships with those hard money lenders is not great. Is great to, again, could be able to say, David, do you know anybody buying properties in Baltimore City? I have this deal over here, right? So that's a great way. And then also, as a wholesaler, you can actually offer this as a part of your business. You can have a hard money lender as a part of your business that you are actually offering. Hey, if you need funding, if you need to buy a deal, here's my hard money lender, right? So if you want this deal, I have this deal right here. Here's my hard money lender that will potentially lend to you on this deal, right?
Work the deal on both sides. I'll sell you the property, and I'll also get you the funding.
Exactly. Providing solutions, right? And that's what it's all about, like being a solution-driven, oriented person that is providing the solutions for whoever. So this is great, and we're actually going to be partnering with David for our wholesaling company as our hard money lender. So this is super exciting to have him on here to share all of this information with us. And then lastly, another really key factor of why wholesalers should be connecting with hard money lenders is to build relationships. Hey, I mean, at the end of the day, right? Wholesaling for the most people, for the most part, is an entry point into real estate, right? You're getting into this because you want to build your capital. At some point, you're going to want to either flip or buy some properties for yourself. And you're going to need what? You're going to need funding.
You'll need that funding.
Exactly. So you can start building those relationships now. Start building that credibility. Start building, that trust in those really, really long-standing relationships. So when it comes time for you to do your first deal, your first couple deals, start building your portfolio out, you already have a whole entire thing that you can go to and request that.
I want to point this out. I want to point this out as well, that a lot of people talk about hard money. They also talk about private money. It's essentially the same thing.
Yeah.
It's just that hard money is just more institutionalized, private lending.
Mm-hmm.
But private lenders pretty much do the same thing. They want to weigh the risk. They're not gonna, unless they're family or something like that, and even still is dangerous, not gonna just give you that check to rehab.
Right.
They want to make sure you have some skin in the game. You hear that term a lot.
Right.
Skin in the game.
Yep.
And the opportunities come to individuals as well, especially to me, what I see on very small loans. Let's say someone needs a $30,000, $40,000 loan that some of these hard money lenders like, you know what, that's too little. I'm not going to lend on that.
Mm-hmm.
I do have some lenders that will, but they charge a lot of points to do that. So there's a charge. But for maybe some private money people, hey, here's a way now, instead of making $30,000, $40,000 sit in the bank, why don't you do a bridge loan, a 1 year interest only loan to someone who needs to fix up a house at 10%, 9%,
right,
12%. You're not going to get that at the bank.
Yep, at all, right? At all. And I know one of the things that I hear, like kind of the rebuttal, well, I don't want to use a hard money lender. They're going to charge me 12, 30, something crazy % on my interest, right? But it's like, okay, so what are you going to do? Are you going to get nothing, or are you going to use, you know what I mean, what you have available to you, somebody that's actually offering to help you with your goals, or just do nothing at all?
Yeah. Now, I want to point this out because I get that question a lot. Why is hard money so expensive? Why are the interest rates so high? Don't look at the interest rate. Everyone gets caught into the interest rate. Why don't you just do the calculations?
Yep.
See how much for you to make, let's say, $50,000 at the end. Mm-hmm. It's going to cost you $7,000.
Yep.
Are you going to say, no, I don't want to make the $43,000? Because I'm paying $7,000.
Absolutely.
How much do you got to work at your job in order to make that $47,000?
Exactly.
So I tell people, don't go so much by the interest rate, go by the holding cost. Mm-hmm. If the interest rate is 12%, but it's going to take you 4 months to finish this house, mm-hmm. and after that, you're putting it for sale, then if the holding cost, let's say $1,000 a month, $800 a month, it's going to cost you $3,200 or $4,000 to hold on to that hard money loan.
Right.
But if you were making $40,000 at the end, that's a good deal.
Yep.
That's a good deal. So do the calculations, and trust me, I do this all the time with people. Oh my God, it's so high. But I'll give an example. Give me 1 second. This fan is making noise and it's annoying me.
Oh, maybe it's the fan. Maybe that's what it was the whole time.
Perhaps. Which one is off?
I'm gonna pull up a question or two that we have here. And guys, make sure you like this video, you share the video. It's gonna help us with optimizing our algorithms and stuff, so more and more people can get this information. I really appreciate you all being here today. And if you have any questions for David, again, we're talking about hard money lending and how all investors, whether you're flipping, you're landlord, or even wholesaling, how and why you need to be connecting with hard money lenders. Okay, so make sure Yeah, it was the fan. Somebody said it
It
was
was a fan.
the sound is gone now.
Oh boy, there you go. But blame the weather. It was 80 degrees today, but it's gonna be like cold tonight. It's gonna snow next week. It's crazy.
I know. Oh my, it is crazy. We're outside with like sweaters on today, and I'm like, what? I was hoping it would be like, this is it. Like now it's spring, but it was like,
Tomorrow's it.
nah.
It's getting cold again this weekend.
Right, right. I'm gonna
Yeah.
pull up. I'm gonna pull up a couple questions here. We have a question here. It says, what is the minimum for a hard money loan?
That's a good question. I have many lenders, and the lowest that I've seen so far is 20,000
Mm-hmm.
on a hard money loan. Just over this weekend, I did find someone who will lend as little as 10,000, but it's not a loan on the property. It's a loan based on basically double your income. So, like if you are W-2 person, have a job, they'll lend you twice what you make, but the minimum you got to make is 30,000 a year, and they got some other requirements. But for hard money, where it's more asset based, the smallest I've seen is 20,000. I got some other people who go down to 25, but I got one guy's 20,000, but he is very expensive. Minimum of 7 points if it's 9 months loan, or 10 points if it's a year bridge loan.
Can you explain what points are for those who don't know?
Sure. Points, it basically stands for 1%. So if he's charging 10 points on a 20,000 loan, meaning that he wants a charge of $2,000 just for him to do that loan. Now, this is on top of, whatever fees to close, but this is what he gets. As a broker, I'm going to charge points as well, but I'm not going to charge 10. I'm not going to charge that much. But he's very flexible. And he charges that because he knows no one else does 20,000.
Right.
Most of them that I've seen, the minimum is around 50,000. And I'm going to point this out as well. The ones who are minimum of 50,000, usually the house value's got to be 75,000 or 100,000 ARV.
Okay.
Or as is. So, or I should even point this out, per unit. So I had someone in upstate New York, they were buying a 2-family home for 55,000. No hard money lender wanted to touch it except for that guy who wanted to charge the 10 points.
Right.
Wow. To touch it. Just because it's 2 units, they want it to be a minimum of 150,000, 75,000 per unit. So some hard money lenders, upstate New York, Pennsylvania, Ohio, West Virginia, those areas where the prices can be very low. That's what I know. I'm sure there's other parts of the country that are very low as well. But I'm in the Northeast, so those are the calls I get. A lot of those loans, it's like, well, do you have another property you can refinance? Let's see if I can find another solution.
Right. Right. I love it.
Or business credit. Business credit's a great way to get into that as well.
Right. Okay. And one thing before I address this next question, one thing that you mentioned too was about the W-9, right? So this is even another reason.
W-2.
W-2. So this is another reason that you may want to consider a hard money lender too, is because a lot of people running their own business. You might not have a W-2 to provide to a traditional lender to show them but you have the money. You got the money flowing in, right? But you might write off taxes, and because you're doing that, it decreases your income. So there's a lot of reasons. The hard money lenders they're amazing.
Well, Jasmine, I just want to point out that person who I said they'll go down to 10,000, they're not a hard money lender. They're lending the money based on your income. You can use it for any purpose.
Gotcha.
So actually, you could buy the property from that, and it's not even tied to the mortgage. You can still go to a hard money lender and get another loan.
Wow.
Yeah. Wow. So there's a lot of options.
Yes. Yeah. And this is so helpful. This is so helpful because you're thinking about even like creative strategies on how to buy properties. Now, when you have these different solutions, right now you can say, okay, I can do this, I can do that. Like you don't, it's not a one way. You have options. You have options.
There's many options.
Someone asked, do you offer transactional loans?
Yes, some of my hard money lenders will do it. They'll do it for like 2%. So let me explain what a transactional loan is. It's basically for, I guess, a wholesaler. If you wanted to grab that property, you need like 200,000. To take this deal off their hands, but you got someone else who's going to buy it within, like, let's say 2 days or so.
Right.
So then you're going to now sell it to, the other person for 230. They're going to lend you that money at a 2% fee.
Right.
Right. So that's what they do.
And sometimes for wholesalers, we use transactional funding if you're doing like a double close. Where you may not have the owner
the person to see what you're making.
Exactly. So this could be a solution for you if that made sense. Let's see what's the next question we have here. We just have guy saying he loves the content. He's a newbie without a deal, and this makes him feel much better. Thank you. You are so welcome, guy. Thanks for being here. We appreciate you. Do you lend nationwide? We got a question.
Almost. There are 7 states right now that we do not, or 8 states. Well, 7, because we do it in California, Arizona, Utah, Nevada. It's some of them on the west side that we do not do. I think Nebraska, Oregon. I don't remember. On the top of my head, I have to look at
Right. Yeah.
But so it's usually on the west side.
Mm-hmm. Love it. And
we're working on that. We'll try to get all 50 states.
Yeah.
We do also do. I do want to mention this. We do also do hard money loans outside the U.S. So if someone wants to build a hotel in the Caribbean, deal's got to be more than $1 million, but we'll lend it. Those deals outside the U.S., they got to be big deals.
What?
So
I did not know that. That is amazing.
If you want to build a sandals in Barbados,
we're gonna have to have another call. Now we got to have another call. That is awesome. We got Guy here again. He said he joined in late. He wants to know what are qualifications that the hard money lender is looking for.
Okay, yes, actually, good question. I did not talk fully about this. I did say that most of the time you have to buy it under a business name, almost always, LLC.
Right.
The other thing is it cannot be owner occupied. So do not try to go for a hard money loan that you say, okay, you're gonna now I'm gonna point out this. You can buy a fix and flipper in a business name, and then your exit strategy for the hard money loan is, okay, I'm gonna refinance, then you can refinance it in your own name.
Right.
Get a house that's fixed up new for cheaper than market value. That way. It's a smart way to actually buy a house.
Wow.
And to also get into real estate investing as well.
Right.
But for the initial hard money loan, it must be built in a business name, must be owner occupied. And I'm going to tell you this, it's more based on the deal itself than your qualifications. You can have bankruptcy. I got lenders, they don't care if you filed bankruptcy yesterday. Does the deal make sense?
Right.
Okay, I'll give you the money. They may not give you all the money, but they may give you half the money.
Right.
And if you're smart, you could come up through creativity. If I could get seller financing from the seller, you might be able to buy that property 100% down.
Yep.
No money out of pocket except for paying for the appraisal, paying for insurance, all those. General things you always got to pay for in a loan.
Right. Love it. Great question, guys. We have Judson as a newbie. Is there a limit to how many properties or the amount that a hard money lender will give you?
Yes. Hello, Judson. He's a friend of mine.
Oh, no. Okay.
So there is not a limit. They just want to make sure that you know what you're doing.
Right.
So you can easily own 100 properties, and hopefully you don't have mortgages on all of them. I mean, hopefully you're going to start to do some fix and flips. You're going to do some rentals, and you're going to start paying off some. Just because it's just dangerous to have everything extremely leveraged. But yes, there really is no limit. There's a limit when you're going to traditional lenders, but no limit when you're going to hard money.
Love it. Love it. Love it. So, this is beautiful. Someone asked, do you lend on multifamilies and commercial properties?
Absolutely. I got lenders that will lend on so many different things. Okay, I'll start with the clean stuff first. Hotels, motels, self-storage, movie theaters. I got people who will do cannabis farms, who will do strip clubs.
Wow.
They lend on. It's different lenders for different things. So that's why, as a broker, I have more options because I have so many lenders, and there's lenders popping in the game every day. There's lenders coming out. But there's a variety of lenders. So basically, you tell me the deal, and I search for it.
Yeah. Do you happen to have any lenders for mobile homes?
Yes. Mobile homes, because I just had a deal rejected that the guy didn't tell me it was a modular home, which is considered, what's the word they're using? Manufactured homes.
Right.
They classify manufactured and mobile homes in the same category. Basically, you can pick it up and go. So I did a search for manufactured homes because the guy told me originally it was a 2-family, but then when they saw it, it's actually 2 modular homes sitting right next to each other. So I went through everything and it got rejected, and they told me, this guy didn't tell you everything. And I'm like, yeah, well, that happens. But now I'm searching for new lenders for him, and hopefully I'm trying to get this loan closed.
Oh, man.
Yeah, try to be upfront with your lender. Let them know everything. Don't hide stuff back.
Yeah, you got to be transparent. I mean, come on. And then I have someone says Puerto Rico.
Puerto Rico is the U.S. Puerto Rico is the U.S. That's not even considered international. So yes, Puerto Rico, definitely. Puerto Rico, Guam, Marshall Islands.
I love it. And then we got a bunch of people just saying, help me. Oh, no. We have here, help me. I'm in Texas. Thank you for your help. I'm a newbie. So we got some people that are, wanting to learn and get your help for sure.
I got a lot of lenders in Texas who love lending in Texas.
Yeah. Yes.
I will say this though. I think someone asked about the multifamily. Be careful with the multifamily. If the population is too low, they don't like to lend there because they're saying, well, how do we know if there's a vacancy, you're going to be able to fill it? They like population of cities greater than 100,000 on those multifamilies. So if it's less than that, you probably got to go more the private money route.
Gotcha.
And one day we could talk about the whole private money because that's a lot of opportunity for your wholesalers as well.
Yes. Some of the things, guys, I want you all to first of all, David, I want you to share, how people can reach you, where they can find you if they're looking for a hard money lender, to connect with, to have on their team, or to actually utilize for your service. How would you like people to connect with you?
I would say right now the best way is through email. So make sure, I get all the messages or whatever. So my email is efundhomes, EFUND, homes, HOMES @gmail.com.
Perfect. efundhomes. And what I'll do is I'll actually put that in the comments as well. But efundhomes @gmail.com. And guys, when I tell you, David is a plethora of information. It's oh my goodness, it's amazing. So this was such a great conversation because again, like just understanding the value of the hard money lenders and how we can all utilize them no matter what stage you're at in your business, whether you're brand new, all the way up to experience and more, right? So
Yes.
guys, everybody should be utilizing, you should be building relationships with hard money lenders. You should have a hard money lender on your team, someone that you can refer to your potential buyers, or someone that you are, again, trying to build and establish a relationship with. So when the time comes for you to begin investing and doing your flips and your rentals and stuff, you can have that person there and ready, right? And you want to, of course, we all want to make this a win-win situation. We want to bring them business too. So offer your hard money lender to other investors. Let them know, that you can help them get funding for properties that you may have. And again, also connecting with the hard money lenders to find buyers. So, I mean, they're so useful. They can help us really with growing our business. So David, I want to thank you so much for taking the
You're very welcome,
time to join me to share this information with our audience here. A lot of us are, a lot of people in our group are getting into this space, and I think this has been very helpful. We got a lot of people saying thank you. This was so informative. Thank you. So great job. And everybody, again, make sure that you reach out to David. If you're looking for a hard money lender, he is the guy. He's amazing. He's real. He has so much knowledge.
I was going to mention this.
You said 25 years, 23 years?
25 years as of February 13th, yes.
25 years.
So as well, call me and just even discuss a deal. If you're not sure if this deal is good or not, I can give you some help. I'll tell you, look, this is something that maybe for your skill level, for, as a newbie, is too much. It's not good enough. There's not enough equity in it. You're just skimming it too thin.
Right.
It's mostly about the deal.
Mm-hmm.
When it comes to at least you flipping it and stuff like that. But if you're as a wholesaler, you need a hard money lender just to help you get more list of buyers, more potential buyers.
Right.
Because there's always one set is landing the deal, is getting that seller to sign, and then getting that buyer.
Right. Absolutely. Well, David, thank you again so much. Everybody, make sure that you go friend request them and connect with David. I'll make sure that I put the email inside of the comments. Again, that's efundhomes@gmail.com if you're looking to connect with him further. And you all have a phenomenal night. Thank you so much.
Thank you, everybody.
All right. Bye-bye.
Okay, bye.